G'day folks, Jim here from FX Charts, Monday the 28th of April. Thanks for tuning in. Well, after a pretty quiet week last week due to Easter, there wasn't a great deal of action on Friday, so we won't dwell on that. But there's going to be a fair bit of volatility, I think, later on this week. We've got a fair bit of data, as I'm sure you know. Starting off with, there's not an awful lot today, but the EU CPI tomorrow. We've got the BOJ tomorrow, the FOMC and US, UK GDP, and on Friday, of course, we've got the non-farm payroll. So it's going to be fairly active. We've also got the manufacturing PMIs in midweek, so that's going to create a bit of interest. The other focus, of course, is on the Russian situation in the Ukraine, and that could easily see a flight to the safe haven currencies like the yen and the Swiss. So given that it's been a fairly quiet week, I won't dwell too much on what is going to happen today, because I don't think we should expect an awful lot. But I thought we might have a look at the more medium-term outlook for some of the currencies. So if we start off with the euro, this is just a 4-hour chart. We seem to have the converging support and resistance here. Now that's at 138.70 and 137.60. I think that'll probably largely cover it today. If we do break out on the top side, which I'm not sure we're going to, this 139, the figure area, should cover it. We've got this gap to fill in here from a couple of Mondays ago. That's at 138.85, and I wouldn't really expect to see it too much higher than that today, as the market keeps its powder dry, waiting for the data later in the week. Now, if we go out to the dailies, though, actually we probably need to go to the weeklies. I think it's easier to see what I'm thinking. I'm just wondering if we're building a rising wedge here. The top side here is at about 140 the figure. There's going to be some good resistance there, obviously a psychological level, and there'll be plenty of option related selling up there as well. If we do go above that, there's not an awful lot to stop it going quite strongly higher, up to 142.5. But given the rhetoric from the ECB recently, they're not going to be happy to see it up there. So I'm taking up the views. Well, I'm fairly neutral here. Sell into rallies. If we see go below 137.5 or so, we could then see a drop towards, let's go back to the daily chart here, back towards the 100-day moving average, which is at 137.25. And then we've got this first FIBO level here, about 136.80, something like that. Below there, we'd see a deeper correction. We've got the 200-day moving average at 135.85. That's unlikely to be seen yet, but we may get some interest later in the week down here, particularly if the European EU CPI is weak. I think that's on Wednesday. We got the German CPI on Tuesday, the EU CPI on Wednesday, and if that's weak, then we might see the market think about the ECB easing liquidity, and that'll put the pressure on the downside. So we have to wait for that. But that's about it for the euro. Dollar yen is doing not an awful lot. It seems reasonably happy between 102 and 103. Really got down to 101.90 odd the other day, but has bounced a little bit. While the Russian situation carries on, and it doesn't look as though that's getting any better. We're probably going to see some more demand for yen and safe haven quality that it has. So below 101, below Friday's low 101.90. This support here, 101.45, will probably hold it for a little while. Below there, we've got rising trend support at 101.30. If we go further out, blow this up a little bit on the dailies. We've got the 200-day moving average down here at 101. So for the time being, I suspect this sort of choppy sideways trade is going to carry on. But it is beginning to look to me as though we could actually see a bit of a break to the downside eventually. Having said that, the dailies are absolutely neutral. The weeklies, they're pointing slightly lower, but nothing major. If I'm wrong there, well, on the top side, 102.70 has been resistance, and above that we've got sort of various supports up here around at 102.90, 103, and I think that's going to cap it for now. So I wouldn't get too excited about the yen, although I would be looking to sell the crosses and maybe sell the dollar into rallies. That's really about it. But as far as the dollar is concerned, I'd have a pretty tight stop, I think, above sort of 103.10.15. Sterling, well, that is confusing my euro bearish outlook, really, because sterling looks like it's imminently going to break up to new highs. We've got the UK GDP out later on this week, and if that's strong, we've also got some other data later on in the week for sterling. And if the numbers continue generally to be strong, then the market's going to be getting pretty stoked up about the chances of a UK interest rate rise, going the opposite way to the ECB. So I think possibly euro sterling might be a reasonable play. Sell euro, buy sterling. But this 168.40 levels very supportive, very strong resistance, I should say. At the moment, it hasn't been up there beyond there really for quite a few years now, 4 or 5 years. We're sitting above 167.80 support. In the short term, if that does break, this is just a 4-hour chart. If that does break, we could head back down here towards this sort of 167.80 and possibly 167, the figure level. But if we go further out, the first red line, actually we have to go out to the weeklies to check this out. And as you can see above the current high, 168.40 where we are at the moment, we need to go all the way back here to November, was it 2009? 168.70 was that peak. And then before that, we go to way back to August 2009. And that resistance there is at 170.5. So there's not an awful lot. So the cable's got potentially quite a decent move to the top side. But it needs to hold this support here at about just under 167. If we go back to the dailies, it needs to hold this 166.90 area. If it breaks through there, then we might head back down below 166.5, all the way back down, possibly to the 100-day moving average at 165.5. But at the moment, cable does look okay. The dailies are reasonably flat, but they're not showing really much signs of turning over. The weeklies equally, they're not really showing an awful lot, so it could be pretty choppy. But while the UK data looks okay, then I guess sterling will try and push it a little bit higher. Dollar Swiss, not doing an awful lot. It's spiked up to 88.60, I think it was on Friday, 88.5 on Friday. It's come back down. It's trading just above 88, the figure at the moment. Not doing anything major really. It might drift down to sort of 87, 85 or so today, but I don't really think we're going to see too much. On the dailies, well, it's really in this sort of sideways choppy movement, and I think what we need to do is keep an eye on this channel. There's support here. This level here down around 87.30 will provide support, as will this low down here just under 87, 86.98 I think that was. Below there, then we might be heading back down here to sort of 85.5, but I don't think that's going to be the case yet. The dailies are not suggesting we've got a move of that sort coming. Personally, I still prefer to buy dollars, but there's decent resistance here in this sort of 88.70 area, trend resistance, and also the 100-day moving average up towards sort of 89 the figure. So equally, the top side is going to be pretty difficult at the moment as well. And once again, I don't expect to see too much today, so I think I'd keep my powder dry for later in the week. The Aussie and the Kiwi, they both look a little bit soft. The Aussies are trading in a small sort of descending channel at the moment. The points to watch today would appear to be around 92.40, and on the downside around 92 sort of 20.25. There's going to be some support from this rising trend level here. That's around 92 the figure at the moment. And I don't think we're going under there. If we do, at 91.85 is going to be quite important, because that was the neckline at the head and shoulders that we were watching for quite a long time. Now we need to hold on to that. If we break down below sort of 91.70 or so, then I think we're probably in for a deeper correction for the Aussie. In the meantime, I'd probably be a buyer of dips, I think, down around 92, and eventually looking for a break back towards sort of 93, and then up to sort of maybe 93.70. That's not likely to be seen today. As I say, this 93.40 is the top side of the channel, and 92.20.30 looks to be the bottom side of it. So I'd just trade that range for the next couple of days, I think. Not looking for too much in either direction. The Kiwi. Kiwi looks as though it might have made a bit of a top here at 87.40 odd. Now we need to hold on to this support here, which is at about 85.25. Currently trading at 85.80, so it looks fairly safe today. The short-term charts actually are showing some minor bullish divergence, so we could get a bit of a push to the top side, and maybe another look at sort of 80, 86, 86.20 even. I wouldn't imagine we're going to see any move of that magnitude today. And on the downside, 85, sort of 45.50 looks to have it covered for the time being. Further out though, it does look as though this could be maybe a bit more of an important top. And if we do break down through sort of 85, the figure 84.90, we could be headed back towards the 100-day moving average at 83.80. Now, given that the general consensus is that the RBNZ have got one, maybe two more rate hikes ahead of them later this year, I think the downside for the Kiwi is probably fairly limited. Maybe a better bet is to trade Aussie Kiwi from the short side, short Aussie, long Kiwi. But the dailies at the moment, they are looking negative, as they are for the Aussie, I should say, by the way. The weeklies do also look as though they may be turning over a little bit. So I think possibly selling into strength for the Kiwi, maybe around this sort of 86, 86.40, 50 level if we see it, for an eventual break of this sort of neckline, I guess it is, for head and shoulders, below 85, sort of 30, below, and then below the FIBO level at 85 figure, maybe for a test down to back towards this sort of 84 level. So that's about it for the moment, though. As I say, that's a fairly medium-term outlook, and I wouldn't be looking for too much today. I think we've got the US pending home sales and the Dallas Fed manufacturing index today. There's nothing out of Europe, nothing out of Japan, and it's a Japanese holiday tomorrow, so I think the yen will be fairly quiet as well. The UK GDP comes up tomorrow, so I don't expect cable to do an awful lot today ahead of that. So all up a pretty range-bound day, so have a good one, and we'll talk to you tomorrow. Cheers.